Welcome to today's explainer. You look at a flashing ticker tape and it's easy to wonder how all these massive moving parts of the global financial engine actually fit together. Today we're diving straight into the mechanics and the literal timing of global stock markets. We're going to decode exactly when the world trades, where the real opportunities are hiding, and how this whole underlying infrastructure actually operates behind the scenes.
So here's a thought to start us off. When does the global market actually sleep? We always hear about the closing bell, right? But on a global scale, that bell's kind of just an illusion. Somewhere in the world, a market is always open. Capital's flowing and opportunities are shifting around. Grasping this continuous 24/7 cycle totally changes how you view global finance. Whether you've been trading for years or you're just starting to analyze market behavior, understanding the precise timing of these capital flows is absolutely crucial to seeing the big picture.
So here's the roadmap we're using today. First, we'll master the global clock. Then we'll talk about why you need to practice before you play. Third, choosing your trading platform. And finally, we'll break down the exchange business model.
All right, part 1. Master the global clock, time zones, and trading. Let's get into it.
If we literally follow the sun across the globe, you can see exactly how the trading day unfolds. It kicks off in Asia, with the Tokyo securities market opening up at 9 a.m. Japan Standard Time. Then, as the Asian trading day starts winding down, all that liquidity shifts westward, and the London equities market opens at 8 a.m. GMT. Fast forward a few hours, and the baton gets passed across the Atlantic, with the New York Stock Exchange roaring to life at 9:30 a.m. Eastern Time. These regional market hours create this continuous overlapping chain. Because of these distinct time zones, global trading availability is nearly seamless. It lets you align your strategies with whichever major financial center happens to be actively moving at that very moment.
Now, there are a few caveats here. While trading spans the globe all week long, most of your traditional stock markets do still close on the weekends. Sure, some platforms give you extended or after-hours access, and yeah, cryptocurrency markets literally never close. But for traditional equities, these weekend pauses are a huge factor you've got to weave into whatever strategy you're building.
Moving right along to part 2, practice before you play and protecting your capital.
Look, if your goal is to wake up at 3 a.m. to trade the London Open, doing that live on your very first try is just a massive gamble. Enter the demo account. This isn't just some beginner's safety net. Think of it more like a high-level flight simulator. It lets us test how those bizarre, unpredictable volatility spikes actually behave during different global market opening times. You get to see if your specific strategies actually hold up across international hours, all completely risk-free, way before a single dime of real capital is ever exposed to the market.
Which brings us to part 3, choosing your trading platform. Basically, arming yourself.
Different brokers are essentially specialized tools. You wouldn't use a hammer on a screw, right? And you definitely shouldn't use a complex institutional platform if you're just starting out. Looking out across the major trading platforms today, there really is no one-size-fits-all. You've got XTB offering this incredibly intuitive interface that's fantastic for getting started. But then you have platforms like Admiral Markets and RoboForex, and those pack the heavy, institutional firepower and advanced charting you'd need for complex technical analysis. Or maybe you need AvaTrade for international regulation or FP Markets for raw spread pricing. The main takeaway here is you have to match the technical weight of your platform to your specific strategic needs.
And when we expand our horizons beyond traditional stocks, things get even more dynamic. Traditional markets hit those weekend walls we talked about earlier, but crypto and Forex break those walls down entirely. Operating in these continuous markets means you need platforms built for extreme liquidity and nonstop execution. Binance obviously leads the charge in crypto with massive liquidity, while places like Bybit and Mexico are built to handle advanced derivatives. On the Forex side, brokers like XNES and IC markets are engineered for incredibly tight spreads and high-speed execution. And that is absolutely essential when you're trading across radically different time zones where the market literally never sleeps.
All right, our final section, part 4, the exchange business model. Or, as I like to call it, understanding the house.
It is wild to see just how many ways the exchanges monetize this entire ecosystem. Exchanges like the National Securities Market of India, the NYSE, the LSE, they basically operate like the house in a casino. They aren't betting on the direction of the market, they are monetizing its movement. They are pulling in profit from transaction fees on every single trade, they charge listing fees, they sell the very market data we rely on, and they generate massive revenue from clearing, settlement, and derivatives trading. The house always wins because it provides the infrastructure. That makes it absolutely crucial for us to navigate that infrastructure smartly.
Because the house makes money on constant activity, and because these global markets are always open, the temptation to overtrade based on sheer noise is just massive. Global events and rapid technological shifts will cause sudden market movements, for sure. But reacting emotionally, that means playing directly into the hands of the exchange's business model. This is where a clear strategy, one based on actual market trends and real economic shifts, acts as your anchor. By analyzing the data carefully and tuning out that impulse to react to every little 24/7 fluctuation, we can actually manage the inevitable ups and downs.
So, take a hard look at the strategies you're using right now, or the ones you're planning to build. Are your trades actually aligned with the global clock, or are you kind of just trading in the dark? It is so fascinating to see how understanding this continuous chain of market hours, having the right tools, and knowing the mechanics of the exchanges can completely change your perspective on global finance. Apply this playbook to your strategy before you make your next move. Thanks for exploring all of this with me on today's Explainer, and keep learning.